Hey everyone, welcome back to another episode of Mortgage Made Simple. I'm Blake Overton. Today's a big one. It's Federal Reserve Day. Anytime the Federal Reserve meets, the noise level gets really jumpy out there. Headlines get dramatic. Social media gets really loud, and everyone starts asking the same dang question over and over again. Is this going to move rates up or is it going to move mortgage rates down? Welcome to Mortgage Made Simple, the podcast that cuts through the confusion of home loans and delivers exactly what you need to know. Fast, simple, and without the fluff. And if you're planning on buying, selling, refinancing, or even just thinking about moving in the next year, days like today really help shape what borrowing money is actually going to cost you. So before we get into what the Fed might do, let's just set the stage, because this part never really gets explained clearly or simply. I want you to think of this. Think of the Federal Reserve as the country's financial referee. Their job is to keep the economy steady, not too hot with inflation, not too cold with slow growth. They control certain short-term interest rates, and they monitor inflation, and they guide the broader financial environment. But they do not set mortgage rates. Their decisions just ripple outward into the larger economy, and that's why days like today just get so much attention. So now that we've gotten that foundation in place, let's just move into what economists expect from today's meeting. Most experts expect a small move, maybe a 0.25% cut, and that's based on a Reuters survey of more than 100 economists. But here's the part that really matters. Even if the Fed cuts today, mortgage rates might barely even move. And CBS News actually summed this up pretty well recently. They said that lenders use the Fed as a guide, not a final decision maker. And I like that. So yeah, today's important, just not in that dramatic market flipping way that social media and the news like to frame it as. And that brings us right into the core misunderstanding. And that's why mortgage rates don't just follow whatever the Fed does. Here's a simple version of that. The Fed controls short-term rates, credit cards, auto loans, HELOCs, and mortgage rates follow long-term trends, especially the 10-year Treasury bond. And those two things don't always move together. Sometimes they move in completely different directions. And that's why places like Realtor.com and Bankrate both say that they're not expecting big mortgage rate swings from today's announcement. And so here's the kicker. Mortgage rates often move before the Fed meeting even takes place because lenders already priced in what they think is coming down the line. So a real quick example of that, I ran numbers for a buyer last week and a tiny rate move changed their payment by like $25. That's how small these shifts usually are. So with that in mind, let's zoom out and look at where rates actually stand this morning. Right now, before any Fed announcement, 30-year fixed rates are sitting in the low sixes. I'm still seeing loans priced out in the high fives, but that's exactly where most experts expect them to stay. So to put that into actual dollars, 0.1%, 0.10 on a $300,000 loan changes your payment by about $20 to $25 per month. So yeah, rates might wiggle after today, but we're talking small moves, guys, not a shock wave. And really, since everyone always asks this question, they always say, what should I actually pay attention to, Blake? Let's get into that. You don't need to read the full Fed statement to decode what the economists are saying. You just really listen for one thing. Do they sound calm or do they sound concerned? And if they say that inflation is cooling, rates may drift slightly lower. And if they sound cautious or unsure, rates may drift slightly higher. So either way, the movement should probably be pretty mild, I would expect. And CBS News even said that affordable mortgage rate people are waiting for what might already be available. And honestly, that checks out from what I'm seeing. So let's bring it all the way down for you. So what does this mean for buyers and homeowners? First, don't let the headlines whip you around. Rates are expected to stay fairly steady. Second, if today's rates do fit in your budget, locking in is probably a solid move. And this isn't a day where the market suddenly flips upside down, so waiting for a dramatic drop probably won't pay off. Third, if you're waiting for a huge rate crash, this meeting probably isn't going to deliver that. Fourth, refinancing may look more attractive in 2026, but it still depends on what your timeline is and how how long the home is that you're going to stay in. So the big picture here matters more than the micro movements. The difference between 6.25 and 6.125 isn't really going to determine long-term affordability. And here's my honest take. A lot of the chaos around Fed Day comes from content creators who need drama. It's not the kind of day where you need to keep refreshing your news feed. So the bottom line is here that today matters, just not in the headline grabbing way that it's often presented as. Rates are likely staying in those low sixes with minor movement depending on how the Fed talks about inflation. So if you want help running numbers, or you want to see what a small rate change would actually do to your payment, you can reach out anytime or apply at clearmortgageplan.com. You can follow me on all other social media platforms, Spotify, Apple Podcasts. Thanks for listening to Mortgage Made Simple. Stay grounded, skip the noise, and keep your focus where it actually matters. You're probably good. Have a good one. We'll catch you later.